live, and I had my charts up. I was running on my webcam on my laptop. I was streaming live, doing the thing. And after I finished, I realized that because I had my headset on. I don't have like a nice microphone. I do, but I don't. I like to move around the house when I do my streams. I had my microphone jack put into the like the headphone jack, and the headphone jack into the speaker jack. So there was no audio. So that was nice. But I'm going to be trying to do these lives more often. I find that I'm able to kind of get content out there, get my thoughts out there easier by just opening up the camera and talking. So a little disappointed that didn't work, but now I know I should be able to know how to do it correctly next time. So you're watching me on my drive to work. Don't worry, I'm paying attention to the road more so than anything, but I did want to get my thoughts out there today because obviously the markets are full of drama. And right now, no surprise, tech is selling off. Google had good earnings, it's selling off. We got Amazon earnings today. Everybody's expecting it to sell off, even though it's got a good earnings. That's exactly why it's going to pop, I think. When I was looking at my charts last night, I noticed that Nvidia is sitting at, a really, really, really juicy level. The last time it was this close to my Gann angle, which is my expected return, it was early breakout about a year ago. And so right now, I expect any shares that I buy Nvidia to return me 33% in 12 months. That's pretty damn good for a sleep easy stock like Nvidia. If that's too risky for you, they don't like that much volatility. They don't like the semiconductors close to retirement. Even Amazon is presenting a very good opportunity right now. I think when I drew it, it was like 22% to 25%. 52-week return minimum expectation. So that's awesome. Crypto, not looking good. Really, it's not looking good. Bitcoin is very close to a key Fibonacci level, and actually it's probably tapping it as we speak, which means that the bottom could be in today. By the way, none of this is financial advice, for entertainment purposes only, and they're simply the opinions of some guy on the internet that you don't know. But it could absolutely be today. Hopefully it is. What's causing this sell-off? Well, I think we can actually draw it back to when silver and gold started to crash. There were forced liquidations. The brokers, maybe I have that wrong, but they upped the margin requirement. People were buying silver and gold on the paper market on leverage. They were taking out margin to buy gold and silver, to trade it up. And the brokers basically said, we're going to require that you have more collateral in order to hold this much margin. We're going to raise the margin requirements. This forced lots of people and really institutions to sell off their positions in gold and silver. They didn't have the margin requirements. And when they don't have the margin requirements and they sell off all at once, it causes a cascade. And this is similar to what happened last April when we all got liberated. Once the selling begins, stop losses start to trigger and other people start to get liquidated. And it creates this snowball effect. And when everybody has margin calls to cover, they start selling off other assets in order to pay off those margin debts. And it causes selling and pressure in other sectors, like the stock market, like the crypto market. And so I think that's all that is happening right now, is we are seeing a sort of like an artificial selling pressure because people just need to cover their debts. So do I think there's going to be some kind of rotation? Actually, I don't. I think that once this selling pressure ends, I think that what we were seeing over the last year just continues. AI continues to pump, tech continues to pump, gold and silver continue to pump. I don't think anything is really going to change. I think because all this is, you know, there were new margin requirements to slow down the metals market. Energy continues to do really well, though. Gas and energy, while we are in this volatile time, gas stocks like Exxon, Chevron, ConocoPhillips, Halliburton, Baker Hughes, Marathon Petroleum, those are the names that I like, they are going to do well. And they already have tailwinds behind them macroeconomically, geopolitically, and like with the data centers, they're going to be the ones powering them. So many of these data centers, you know, like there are retail darlings like Iron and Nebius. They're going to require a lot of data centers to be built. And there seems to be some people that I respect doubting if we're really going to be able to build all of these data centers that we said we were going to be able to build. And we're not going to be able to build all those data centers if we can't power them. And we can't get nuclear online that quick. So if we can't get nuclear online quick enough to build all these data centers that it seems like our entire stock market is hinging on, then we're going to just have to use gas. And so that's why right now I have such a big position in energy, or at least I created a pretty big one, because there's just so many different positive catalysts that can trigger. And if there's any negative catalysts market-wide, like what's happening right now, they perform well. So it just seemed like the perfect hedge at the time. So also yesterday I had mentioned that Robinhood was a stock that I was not looking at yet. I thought would be dead money along with Coin and SoFi. But then when I logged off, I saw that actually it had dropped even more, and now it is at a level where I actually started a position. This morning, it's about 4% below that position, so it's doing a little bungee jump off of my support levels. But that's why I buy low. I don't chase. I do not chase, because what's worse, you know, buying the top or buying the like what I thought was the bottom, right? I never chase. I knew people buying silver a couple weeks ago when silver was $100, $120, and I'm like, dude, the time to buy it was last year. If you were gonna buy it, that's when you were gonna buy it. And I'll leave you with this because I'm almost to work. Your mindset should have been to sell stocks a month or two ago if you were going to do it. It's too late now. Your positions are down. Just hold them. This is why you should hold stocks that you feel comfortable if there is a big dip, so you can buy more. And so I'll leave you with this. Good luck. Good luck out there. I would be looking at names that are going to survive this downturn, that are only selling down because the market is selling down. And once the market changes its mind, which it always does, you know, the ones that are best positioned, the ones that are the strongest, the ones that are, you know, like your Nvidias and your Microsofts and your Googles, you know, the Mag 7's a great example, but also, you know, JP Morgan, you know, the ones that are stalwarts, that are going to be around forever, those are the ones that I would be looking at right now. If you ever wanted to build a position in one of them, this would be the time, because they will recover. Well, anyways, thank you so much. And until next time, Rusty Ryan, out.